Friends, as you are aware that this knowledge sharing journey we have started in 2020, and since then continuously on every Friday 4 to 6 is a symbol now for knowledge sharing, and we try to organize those topics where the pain point of industry and the professionals and other people are facing. So this topic which we have selected, that is one issue which is concerning to all designated person in companies. So friends, the SEBI Prohibition of Insider Trading Regulation defined the term designated person based on their designation level, role and functions to have access to UPSI. The said regulation put in place an obligation upon the designated person with regard to trading in the securities of their company. Now, on the basis of this, the baseline is that designated person cannot trade in the securities of the company when they are in the possession of UPSI, and in other case, there are do's and don'ts that designated person should follow diligently. Even if you're not trading, but you have to follow certain things. Now, the important is failure to comply with these regulations can have serious legal and financial implication for the individual involved as well as the company. Because sometime when some issue notice is coming on the individual, then the company name is automatically dragged on. So this webinar will dwell upon the do's and don'ts that designated person must observe to maintain compliance while trading in securities of their own company and to uphold the integrity of the financial ecosystem. Friends, as you are aware that when there is a law and then you have to follow that law, sometimes people arbitrage on the basis of the penalty. That penalty is less, profit is more, gain is more, so they do this. So this takeover regulation, the saying is perfectly right, that embrace compliance for it costs little, while non-compliance exacting a hefty toll. Now, if you follow compliance, it can be easy and penalty will be less. But if you are not following, then the penalty is very hefty. Not only penalty, but reputational loss also. So friends, for today's discussion, I extend a very hearty welcome to our learned speaker. And these people with whom we have requested to come today, they are the company secretaries, compliance officer of big companies, those who are listed company, and they are facing this type because their valuation and everything is on a high esteem and their company is a very good companies. So first, I will welcome Mr. Sanjay Gupta. He's a Senior Vice President and Company Secretary at Havells India Limited. He independently handled the IPOs, right issue for Gwalior Poly Pipes and Competent Automobiles in the early days of his career at 26-27 years of his age. Before joining Havells India Limited, he worked for 7 years with Competent Automobiles Limited and 2 years with Dalmia Bharat Limited. And then since he is in Havells, and you have seen the progress of Havells from a shop in the Bhagirath Palace to a giant in India today, and every household name is there which is not using Havells. That is one. And that success goes to all management as well as the people, those who are managing things. So I welcome Sanjay for this program.
Thank you, Pavanji.
Then we have Ms. Sonali, is a Chief Legal Officer, CS and Strategy at Saurashtra Cement Limited. She has over 20 years of work experience in secretarial legal finance with core expertise in corporate law and land and mining laws. She has been working as a head of secretarial department since 2004. So you can understand, since last 19 years she is here and she has seen ups and downs. And today Saurashtra Cement is one of the big and good company. So we will definitely get knowledge from Sonali how they are managing their compliance and what are the practical problems. Then, so I welcome Sonali for this program. Then we have Anand Pandey, is a company secretary in Policy Bazaar group. He possesses more than 10 years of experience in the field of securities law, capital market advisory, IPO, investor funding, corporate restructuring, transaction, joint venture advisory, secretarial audit, commercial agreement, due diligence, corporate compliance, IPR. He worked across different industries with logistic, transportation, manufacturing, service, fintech, insurance, and credit advisory. At a very short age, he has worked in so many industries, so many companies. So you can understand, we will get the clue from his knowledge and expertise. I welcome Anand for this program. Then we have Ms. Mohini
Thank you,
Vashi.
sir.
She's a partner head, ESOP and Insider Law Service, corporate professional, and Mohini is a now pet name in insider trading laws, not doing insider trading. I welcome Mohini. And then we have Ms. Nikita Vijay. She's a senior associate, securities law and corporate litigation, corporate professional, and she handles various cases relating to the insider trading. Now, friends, today's structure of the program is like this. First, Mohini will give a presentation and take you to about this particular concept of SEBI PIT related to designated person, do's and don'ts. No doubt, PIT regulation is a one program, but under this contra trade, the do's and don'ts for the designated person, and then various other aspects relating to PIT that we have already done the program, but every time something new is coming and SEBI is also evolving. So what we'll do, Mohini will give a presentation on this. Then we will have a roundtable discussion with our learned speakers, and we have identified the questions. The important question is that these people are working and these people are doing and managing their compliances in giving instruction to various designated persons. How they are doing, what are the problems they are facing, how things are there. So we will discuss with them. Then Nikita will show you some case law relating to designated person. So you can, and then after that, we will take up a question answer. So anybody has any question, please write to us. We have received few questions that we will ask from our panelists. So with these things, I will request Mohini. But before requesting Mohini, because we are normally announcing at the last, but that time so many people are not available. We have lined up program on next Friday on 4th. That is a first Friday, as you are aware that we are doing the webinar on updation. So company security law, insolvency law, and FEMA law, recap of recent regulatory and legal updates. My request to all the delegates and all the people, those who are here, this is very important program. Whatever till today to this first Friday to last first Friday of the month, whatever new thing has come, we will discuss. We are discussing and we are updating. So in case you have missed out anything, you can understand. So all your people, all your colleagues, those who are there, if they want to understand, so we discuss what is the law, what are the changes, what will be the impact, and how this will you will manage this. So we will have on 4th. Then 11th of August, we have a RPT under section 29A of IBC that we will discuss. And then 18th August, we are having a very important topic, reclassification of promoter, that so many companies are facing the reclassification issue. We will discuss. So with these things, I request Mohini to give her presentation on this concept of designated person, and then we will do the roundtable. Over to you, Mohini.
Yeah, thank you. Good afternoon, everyone. So I'm sharing my screen so that we can get an insight that what are the do's and don'ts for the designated persons. for trading in the equity shares of their company. So I'm just sharing my screen, please. Just yeah.
Yeah, it is just
This is the launch.
slideshow.
Right, just yeah.
Yeah, it's
So
okay.
today, okay, so today we are going to cover a topic from entire SEBI PIT regulations, that what are the do's and don'ts for the designated persons when it comes to the question that they want to buy or sell, or in any manner they want to trade in the securities of their own company. So before we come to that particular topic, so it's necessary to get an insight that how this insider trading regulations have evolved. So yes, we all are aware of that this regulation is not new. It's since 1992, it's in India. And after, in 2013, it is decided that to make a overall change in the regulation. So SODI committee was set up. And under the SODI committee, after this SODI committee report, the SEBI regulations of 1992 is completely be changed and come out with a new, in a new shape, in a new manner, in the name of SEBI PIT regulations 2015. After 2015, if we see from this chart itself, that since in the last these 7 years itself, the SEBI has come out and issued many circulars, many FAQs, and even in the 2018 December, they have come out with a change, with a major change, wherein the structured digital database type of the compliance being introduced to protect the insider trading activities, to prevent the insider trading activities in the market. So, and the latest one we all are aware of, that the freezing of the PAN of the designated person, that has also been now be coming, and it will be implemented in a phased manner. So in this manner, if we can see the intent of the SEBI, that how the serious the SEBI is if it comes to the insider trading. So why the SEBI has enacted this insider trading is, yes, definitely wants to keep an eye that, yes, and to keep a check that no malpractices being followed in the trading of the securities of the company. Then everyone, whether it's a person who is inside the organization or is a shareholder who do not have the possession of all time the information of the company, they all get a same level playing field in the securities of the company. Nobody can use the information for their own personal benefit. And so these are the basic things and intent which the SEBI will think it of is trying to regulate through this insider trading regulations. Now, when it comes to what the insider trading is, so directly the insider trading means is when you trade in the securities of a company on the basis of the information which is not in public, that is UPSI, and by the person who has the UPSI. So it collectively makes that it's an insider trading comes. Insider trading is we can say it's a white collar crime, because you are trading in the securities of your company on the basis of the information which you have the first hand and the other people are not aware of. And definitely it is a serious offense, because you are breaching the underlying trust and the confidence among the stakeholders. So this is the reason why the insider trading is being considered as a crime. Now, before we come to know that what the do's and don'ts are, first is that who all the organizations are where the information of the listed companies are being handled. So the companies or the organizations where this kind of informations are being handled is, first, yes, all time it's a listed company itself, because they are handling their own information. Proposed to be listed entities, listed companies, reason because they are coming out in the public, so they have the information which is before it's not in the public, they already have the UPSI at their end. Then the intermediaries and fiduciaries like auditors, statutory auditors, before the financials come into the public, they are aware of. So these are the positions and these are the organizations by virtue of their functional or their activities, their business activities, they are the organization wherein the UPSI generally the persons working in these organizations possess. Now, when it comes to the insider trading, the word first comes to the insider. As we talked about that these are the like listed company, proposed to be listed, intermediaries and fiduciaries. These are the organizations who handles the UPSI. Now, insiders, they are the insiders, but the people who are working in these organizations become the insiders first. And generally, the persons who are working in this organization are associated with the persons working in the organization or in any manner with respect to any business activity, if they are connected with these organizations, also comes within the bracket of the insider. So basically, if we broadly cover up those types of people and the individuals, then they comes to like the promoters, board of directors, KMPs, employees of the company, the material subsidiaries employees, outsiders like friends. We have the persons have the friends, might be they are passing on the information to their friends, immediate relatives. When you can discuss the things with your brother, sister. These are the also the persons who by relationship with you might be getting the information which you possess. So if they become the partner in that they come to know that yes, the information is UPSI, then they also come within the bracket of this insider. So these are the categories. Broadly, we say that they are the insiders. Now, in the insider trading, the second word is trading. When it comes to the trading, so what all the trading means? The trading means it's subscribing, buying, selling, dealing, agreeing to buy, sell, deal, and the pledging of shares. So even the pledge, when I'm pledging the shares, it's not that I am that the shares will go out of my hand. It's only be pledged in the hands of some other second party, but still it will be also be traded and covered under the word trading.
Just explain about the dealing.
So dealing is like any gift. It's not by I'm indulging into any selling or buying and I'm not getting any money out of it. It's only I am transferring my shares to my any relative of mine as a gift. That is also be covered under this insider trading. So here also there are very case laws and there are cases wherein the people have gifted the shares and they have taken the shelter that yes, I have gifted. It's not the buying and selling per se. So any kind of dealing, that means you're transferring your shares from your own account to some other's account. It becomes a dealing and that dealing is a trade. Basic prohibition we can say in the insider trading is that no insider should trade in the securities that are listed or proposed to be listed on a stock exchange when in possession of UPSI and published price-sensitive information. So it's a very general, it's a common for everyone that they cannot trade, any person can't trade if he is in the possession of UPSI and he knows that it's an UPSI and the other people and the general public, general investor are not aware about this information. Now, out of the entire insiders, which we talked about, like promoters, directors, auditors, there is a requirement out of the entire insider category. There is a one category which is known as the designated persons. And the designated persons are generally the persons who are directly be related to in the company, like the promoters or the employees who are working in it. For controlling and regulating them, the PIT regulations is covering that every company, every organization, like listed company, proposed to be listed company, and even the fiduciaries who are dealing with the listed company's information should have their code of conduct. And that code of conduct basically be named as the code of conduct to effectively regulate, monitor, and report trading activities carried out by the designated person and their immediate relatives. So this is the code of conduct which every listed company and all the organizations should have. Now, so this code is there. So this code is going to cover the designated persons and who all the designated persons are and how the companies are the organizations are segregating out of the entire employee strength a part of them as a designated person. So the designated persons are being classified on the basis of the two basic criteria. The first basic criteria is the seniority or the designation in the company. So like in the law as well, which I am covering the definition per se, that the two layers, the first two top layers are being covered as a designated person. And the second criteria is the functional role. That means the person in the department who has the excess of an UPSI before it comes to the other, like the finance department. They have the control of the finance, or they have the knowledge of the financial information, sales, turnover, profit before it reaches to the secretarial department even. So these are the two basic criteria where on the basis of which this designated persons are being segregated from the entire employee strength who are working in the company. If I talk about the definition, so the SEBI has also prescribed a definition wherein it says that all the promoters of the company, and basically the companies are also now being including their promoter group in the designated persons category. Then the directors, KMPs, CEO and employees 2 level below CEO, and even the intermediaries and fiduciary and the material subsidiaries, it's also being followed. Then the support staff of the company, like the secretarial staff, like the personal secretary or the assistants and executive secretaries of the chief financial officer, directors, promoters, they are also being considered as a part of a designated person group. And the IT staff, like because they have the access of the servers where the backup and every informations are being stored. So they are also being covered under the definition of designated persons. So when we talk about the applicability of the code of conduct, which every organization make and try to regulate the conduct of the designated persons, it also covers within that code the immediate relative of those designated persons. In the immediate relative, so who all being the immediate relative of these designated persons. So here also, if he or she is married, the spouse of a person is by default a designated relative of the person. Then it comes to the other category of the relative, like parent, sibling, child, either of his own or his of his spouse. They are also being considered as an immediate relative. But the criteria which they need to, or you have to check when you are making these people as a part of an immediate relative, then the criteria is that either these three categories are financially dependent on the designated person, or consults the person in taking any kind of decision relating to the trading in the securities of the company. So these three, out of these three, if they satisfy these conditions, definitely they become a part, and they have to conduct in the manner which the code of conduct of the organization says. So these are the designated person along with the immediate relative by this definition and category. They both are the category of the people who are governed by the code of conduct of any company. When I come to that, what the code of conduct is, so code of conduct have many things other than this monitoring of trading, like who this is applicable, what is the onus on what the CEO and MD has to take the steps when they are coming to the regulation of code of conduct, identification of DP, what are the functions of the compliance officer, what the restrictions are, what the penalties are. And importantly, it covers, regulate, monitor, and reporting the trading of by the DP and their immediate relatives. Now we come to the topic that why that this reporting, monitoring, and the disclosure part, that what the DPs has to follow when it comes to the trading in the equity shares of the company or any security. It's not the equity share, it comes to any security, like in the debt. If the debt is listed, also then the code of conduct becomes applicable on them. If the RITs are there, then also RITs are listed, then also it will come within the definition of this listed security, and these organizations also need to form this code of conduct. So even you are working in the debt listed company or in the organization sponsors of the RITs, also here the regulations are applicable. When you are dealing in the listed securities of the company, the DP has to follow few do's and don'ts. So if I cover, so one by one I cover all those aspects. So the first thing which we are covering here is that the DP has the compliance requirement with respect to the trading window closure, pre-clearance requirements, contra-trade restrictions, and then the disclosures attempt, which after dealing in the securities, they have to give to the company and the stock exchange. We start with the first topic, that is the trading window. So what the trading window means? Trading window means the period during which you can the designated person can trade in the securities of their company. But when the trading window is closed, they can't. So the journal is trading window is open, you can trade, but when the trading window is closed, you can't. So even not the designated person, again, the immediate relatives of the person also can't trade when the trading window is closed for the designated person. So when this trading window closure will happen? So there, if we can, this trading window closure, the two parts we can divide it into. When the trading window is closed for all the designated persons, irrespective of in which designation in which department basically he is working, like in case of a financial result. So in the case of financial results, all the designated person, that means the person who have been categorized as designated person of the company, for them, the trading window is closed from the end of every quarter till the declaration of the financial results. And yes, the point is that it will open after 48 hours of your declaration of results. So this is for the every designated person, irrespective of he is working in the finance department or not. Next trading window closure comes for the concerned designated person. That means a person who is involved in a particular UPSI event in the company, other than the financial results. For them as well, in case of any UPSI events, for those people, the trading window will get closed. So this is that how this trading window closure part will be governed in this entire PIT regulation. To ease out this process, what the SEBI has come out with the circular, wherein they say that the PAN number of every designated person at the PAN level, in the PAN of the designated person, the securities in which securities of the company in which he is employed get auto blocked from the depositories, and they can't deal in the securities of their company during the trading window closure period. So already this has been started, and for Nifty 50 and Sensex companies already applicable, and for rest of the companies who are listed which are listed at the stock exchange, the phase-wise manner has been given that how their securities of the PAN numbers of their designated persons get blocked for that particular security. And we can see from this schedule itself that from April 1st, 2024, all the companies will come under this bracket. Now, if the trading window is closed, it's journal that yes, definitely the designated person can't trade in the securities of their company. But still, there are few exemptions which has been given, or exceptions which are being given here in the law itself, like exercise of the stock options. If the company have the ESOPs, they can pledge their shares. If it's for bona fide purpose, such as raising of fund, they can subscribe to the rights, FPOs, preferential allotment if it comes. They can also participate in the buyback, open offer, and delisting offers if it comes. So these are the few exceptions, and even in the trading window closure period, DP will get a chance that they can go and enter into these kinds of transactions. Now we come to the second. So trading window part we have covered. So now we come to the next part, which is the pre-clearance part. So what the pre-clearance is? Pre-clearance of trade means before trade, the designated person has to take a pre-clearance from its compliance officer. So so when he wants to trade, so he has to check that as per their code of conduct, the companies will put a threshold limit either in terms of value or quantity, that if the designated person is going to enter into trade or the proposed trade is reaching that particular value or the quantity, then before entering into that trade, the person has to take a pre-clearance from its compliance officer. It's not only that for his trade only he has to obtain this pre-clearance, for their immediate relative also they have to take this pre-clearance. The checks is that it can be the pre-clearance can be applied only if the trading window is open. It is to be so no pre-clearance is required when you are executing as per trading plan, which we are going to cover that what the trading plan is. Then the trading, this trade pre-clearance is valid only for a 7 trading days. And if you not, so it's not mandatory that within 7 trading days you have to complete that trade. But yes, it's only the 7 trading days you have to. If you don't want, if the DP don't want to trade in the securities, they are free to, but it's not compulsory. But if he wants to execute up to that quantity or value, he has to execute within the 7 trading days only. And once he has traded or not traded, once he has traded, he has to inform. He has not traded, he has to inform. And within 2 trading days of such last day of the permission, the last trading up to which they have got the permission, if they have not traded, they have to inform to the compliance officer. So these are the requirement which the person has to, the DP has to take, that he wants to trade. The trading window is open and he has obtained the pre-clearance if required, in case he is going to transact in the quantity. The third point comes in the compliance of the designated person is the contra trade. So contra means an opposite transaction, opposite position, buy, not sale, or sale to buy. So that contra trading activities they can't enter, even the designated person and their declared relatives. And this restriction is for a period of 6 months from the previous transaction. This is the reason why the designated persons can't do intra-trade activities. The 6 months is 6 months is the transaction wise, not the quantity wise. General, the confusion in the minds of all the DP is that it's a quantity wise 6 months is applicable. No, it's the transaction wise. An example we take, like in the April, if the purchase of 100 shares being made, then the 6 months starts from the April, and it's almost October till November, till your September end. The person can't enter into the sale activity because it's in opposite. But again, before the September ends or October come, in between June, if he purchase more shares, because the same kind of transaction he can enter, and if he purchase more shares, then this time period will extend from the October till December. So now the fresh period starts from the June. So it's the transaction wise, it's not a quantity wise. Few exceptions still are there, like the exercise of ESOPs, training plan, buyback. In these, they can participate and no contract trade restrictions are there. Yes, the contract trade is being given a power to the compliance officer that, yes, if you prove, if the designated person has some urgency that they want to trade, then they can, with the permission of the compliance officer, they can enter into contract trade activities. So one by one, I want to take two topics from the entire the trading window and the contract trade exception. The first is the ESOPs, and the second one is the trading term. So first I cover the ESOPs part. So in the ESOPs, if it comes, so first stage in the ESOP is the exercise of the ESOP shares. So when I talk about the ESOPs exercise, so here the ESOP exercise is not a trade, and it is not a it doesn't fall in the category of the contra trade. In a simple manner, if we see in this table, so if you have purchased the securities of your company, still you can exercise the ESOPs of yours. And if you have sold the securities of the company, the designated person can still exercise their ESOPs. So ESOP exercise, no contra trade restrictions are applicable. Even the ESOP exercise can be done during the trading window closure period. But when it comes to the second part of it, that is the sale of those ESOP shares, contra trade restrictions apply. When it comes, so what the contra trade here comes to be, like when you have not traded earlier and it's the first ESOP exercise you have done, then you are allowed to sell ESOP shares, because before the ESOP exercise you have not indulged into any kind of purchase or sale. So no contra kind of a thing comes into picture. But in the second scenario, if we say we have purchased, the DP has purchased from the open market, and now he is exercising and he wants to sell those ESOP shares. So here the recent SEBI circular has said, and FAQ has very much clear that no, you can't, because before selling of the ESOP shares within the during period of last 6 months, you have purchased from the open market, irrespective of that whether you have in between exercised your ESOP, you are not supposed to, that you can't sell your ESOP shares as well. But yes, if you have sold it within the last 6 months period and you have exercised your ESOP, then you are allowed to sell your ESOP shares. But if you have purchased, you can't. So the ESOP, so exercise of ESOP, contra trade and trading window is not applicable. When you are selling the ESOP shares, all the restrictions like the trading window time period, pre-clearance, and the contra trade all will apply on the sale of those ESOP shares. Now, the second topic which I want to cover up here is the trading plan. So when it comes to the trading plan and why the trading plan comes in the need to be discussed here separately, because there are few people in the organization sitting at a topmost position, we say like CEOs, CFOs, managing directors, who all time we say that they are perpetually be in the possession of the UPSI, because one or other kind of UPSI always be there which get originated in the company. So in those cases, the so here how they will be able to if they want to purchase or sell their equity shares, how they can do. So there is a one plan or one tool they have been given and provided in the PIT regulations, that is the trading plan. So they can plan a trade, plan, and they can inform it to the company and to the stock exchange as well that this is their trading plan. The trading plan is almost, they have to plan it at least 6 months before the public disclosure, and it is for the 12 months. It's the 12 months and it is to be disclosed, but the important is it's not revocable. So you can't revoke it once you have given. This is the only thing which is in the trading plan is there. But yes, if it's a good tool in the hands of the person who are in the possession of the UPSI, that they can plan their trade and they can give it to the stock exchange. Then even if in between any UPSI comes, which is not there in the starting of the trading plan, then they are allowed to trade in the securities, because at that time already they have planned that thing. So this is the reason why the trading plan is, if they want to, they can give. So benefit of making trading plan is the pre-clearance will not be applicable, and also the restrictions of contra trade is not applicable. So this is a good tool if the persons who are generally in all time, we say they are perpetually in possession of the UPSI, they can use. Last, after the trading, it comes that with the disclosures which after trading in the securities of the company, the designated person and their immediate relatives have to give. So the disclosure requirement is a continual disclosure requirement, wherein the promoter, member of the promoter group or the DP, they need to provide this disclosure. In case if the series of the transaction in a particular quarter and that value of the series of transaction exceeds 10 lakh, then this disclosure they need to give. And this disclosure need to be given within the 2 trading days of such transaction. For the ease of doing business, in the ease of doing business, we can say that here this disclosure requirement has been done away with for those companies who are complying with the circular issued in September 9, 2020. Wherein there is no manual filing is required in case the companies are complying with the circular of system-driven disclosure. So in the system-driven disclosure, what happens is that the designated person's PAN numbers has been given to the depositories by the compliance officer by the company, and based upon that demat account and the PAN numbers, whenever they are trading, the value the depositories are taking out, and the trading, when it reaches to this 10 lakh value, is being displayed over the stock exchange. So if the company is complying with this circular, then their designated person need not to file any manual filing with respect to the disclosure of more than 10 lakh rupees in a particular quarter. So if the companies are not complying with this circular, definitely then the designated person has to do this manual filing, and return the compliance office, the company has to file this disclosure with the stock exchange. So this is the disclosure requirement when the designated person has traded in the securities of their company. To summarize the thing, so it's important that when it comes to the designated person, that for whom he shall be responsible and accountable when it comes to the trading. So yes, he is responsible for the self-trade of himself. Next comes for the trade of the executed by spouse, trade executed by immediate relatives. Immediate relative means the relatives which they have declared. Trade executed by the portfolio managers, because many of the people generally opt for the PMS services. For even those PMS services, if they are trading, their portfolio manager is trading, their trades also being considered, they are executing. So for them also they are responsible and accountable. The trades done by their brokers, trade executed by the other connected person like partnership, concern, firm, trust, HUF, wherein they are the decision makers with respect to the trading in the security. So in all these instances, the designated person is responsible and accountable for their trading activity. So now when it comes key, if the designated person leaves the organization, so whether these all restrictions, trading window closure, contra, pre-clearance is applicable. So it's no, it's not. These restrictions are not applicable because they are no more a designated person of the company once once his last day of working is completed in the organization. But they will be termed as a connected person and they remain as a connected person for a period of 6 months. So for them there is a restrictions in the law itself that it's better that they will not trade for a period of 6 months after their termination in the organization, that means cessation of their employment in the organization, or the UPSI which they have at the time of resigning from the company, till it becomes public. So whichever is later, they have to follow these guidelines. And it's not that they are governed by the code of conduct, but this formula that yes, they have to keep for 6 months, and for the information become public, they have to keep a check over his own trading. So to summarize the entire do's and don'ts. So do's and don'ts. Do's is that trade when not in possession of UPSI. Don't trade when in possession of UPSI. Trade when the trading window is open. Don't trade when the trading window is closed. Trade when pre-clearance is granted and also give an intimation of the approved trades executed and not executed. Don't trade when pre-clearance is not taken or rejected. Always make requisite disclosures under the code for both yourself and your immediate relative. Make disclosures of name, PAN, of immediate relative and person with whom you have a material financial relationship. And acquaint your immediate relatives about the compliance of the priority regulations, because you are getting the information from the company that your trading window is closed. So the designated person immediately informed to their immediate relatives that for them also this trading window is closed. Right? So these are the do's and don'ts. When it comes to the penalty, so companies itself has a first hand that if the TP is found guilty in any of these activities and their violation of the trading window, contra or pre-clearance, then they can freeze the wage of the person, they can suspend the services, they can recover all the profits which they have made and even the claw back those profits as well. And if it comes to the SEBI, then definitely he can be banned from the securities market. In case if we found indulged in the insider trading activities, they can be fined up to 10 lakh, go up to 25 crore, and they can be also be sent in the prison. And yes, definitely, whenever any default of the code of conduct is being made, like the pre-clearance, trading window closure, then there is a prescribed format in which the companies has to inform to the stock exchange that this designated person of this designation has done this kind of a violation, and for them the company has taken these steps. So it becomes public. We can say that it comes in the stock exchange that yes, the person has done these kinds of non-compliance or default in the complying with their code of conduct and regulations. So these are the do's and don'ts and the compliances which every designated person of the listed companies need to consider before it goes for the trading for the equity shares or securities of their company. So compliance costs nothing but non-compliance cost. So act diligently. Thank you. It's from my side. Yeah.
Okay. Thank you very much, Mohini. Thank you. You have explained the entire journey of relating to designated person, including their consequences as well as what to do and what not to do. Okay, so I think friends Anand, Sonali and Sanjay ji, she has given the brief introduction of the complete detail of this, and now all the participants and all the panelists are on the same boat. Now I will start with certain theories that what is the issue, how you people are handling your company. So it will be useful for everyone. So first is I will start with Sanjay ji. Which employee are covered as per the code of conduct of their company? So your company, you have covered. So to whom you are covering? What Moini has said, that is there, or something additional, something extra you are doing. So then I will come to Sonali and then Anand.
Yeah, good evening and thank you. So in Havels, we are going ahead, like a step ahead, and beyond the designated persons, what we have done, we have developed an internal tool, and every employee is is now part of the DPs, regulations and the trainings. And we have included the PAN numbers of all the employees, including their spouses and dependents in that tool. And whatever be the transaction, be it, 1 share or, 100 shares or any share. So they are supposed to take the pre-clearance from the compliance officer. So this is an additional step in which we have taken to avoid any default by the employees, because sometimes what happens, there is not the designated employees, but because of change of position or change of the promotion, these employees keep on coming to the category of designated persons. So to avoid all those situations, we have developed that tool by which we are monitoring the trading requests for all the employees and seeing the status of those employees, whether the trading windows are open or closed. We are approving those transactions on each case-to-case basis. This is one step. And secondly, we are also continuously monitoring or giving the training to all the employees at the time of joining, or the monthly trainings, or be it sometimes from some professionals. So we keep on sensitizing those employees about the PIT regulations.
Okay. Sonali, what is your company is doing?
So what we have done is that at the operating level, most of the decisions which would impact the insider information and the UPSI, we have just stopped those decisions being taken at the operating level. All the decisions which pertains to UPSI rest with the corporate office. This is one. In corporate office, we have made most of the employees as the designated person, except the senior officer level. Beyond the officer level, everybody is under the DP. Third thing, what we have done is at our locational, like we have 5 plants operating across India. Across all locations, what we have done is that each and every employee of the accounts department, the internal audit team, your IT department and the legal department, they form part of the designated persons. So these are the few steps which we have taken, because we are having an employee strength of almost 5,000. So 5,000 to 6,000 employees, we have tried to categorize them in a way that UPSI is not much traveled from one place to another. It is restricted at one particular office. It is not there at the multiple places. And that particular office being the central controlling point, it becomes much easier to ensure that the spill off is not happening.
And what about the training?
So what we start with employee induction. So when we induct the employee, that time as soon as an employee is given the appointment letter, he or she is given the code of conduct, insider trading code of conduct, the confidentiality agreement, which has been prescribed by ICSI. We have made it mandatory for all the designated persons. Each and every DP has to sign a confidentiality agreement with the company. And they have to fill in the initial disclosures within a period of 7 days is statutorily required, but we take it on the same day, the day they are joining. And then when we have the induction program and the induction happening across all the departments, in those induction programs, we cover it at a length, actually. We introduce them to our internal control procedures and systems and the devices on which we are operating. We have also, in fact, made a system that the entire backup of the UPSI West with only one particular server. So UPSI information is also there at one server. It's not like it's on various desktops or places. It is like Office 365, a particular area we have designated for the UPSI information.
Okay. Anand, you are also working in a company which is more employee oriented. What?
Yes, sir. Adding further to what Sanjay sir and Ms. Sonali has mentioned, I am 100% agree with that. If a company is operating on a large scale, I think more than around 10,000 employees, like in our company, it is applicable in our company. We have categorized department on a information basis. Like as we know that finance and secretarial has full access of any UPSI floating in the company. Apart from that, we have categorized department on the basis of data, what they are preparing and disseminating to the different departments. Like we have department of like any company has department of financial planning and analytics. Yeah, that department has also access to the UPSI information like financial data, financial raw data, presenting it to the public and disseminating in the public domain through, obviously through stock exchanges. We have categorized department UPSI on the department basis like FP&A and BU team. Actually, BU team has raw data about the. I'm talking about the business data. On the basis of that, they can interpret the financial results of the company, which may likely impact to the share prices of the company, like it is covered under the definition of UPSI. Finance and secretarial, legal, all the employees of legal. And if you come to the IT department, other than the IT department, we have categorized the DPs on a position basis, on designation basis, like VP and above and manager and above and all that. Apart from that, actually, I genuinely think categorization is a easy task. Basically, we have to educate them. Like I'm talking about the awareness session. We conduct awareness session on PIT regulation for every employees in of the company. I'm not only talking about the DPs. I'm also talking about the connected persons. Like we conduct the awareness session with on a frequency of 5 to 6 months for all the employees. Basically, see, actually, if a guy comes from the sales background or operations, he doesn't know about the provision because he doesn't come from the legal background or secretarial field and all that.
But Anand, suppose I'm your agent and I'm in the sales department and I'm selling more policies. So I'm aware that more business is coming.
No, yes. As I earlier told you that on the basis of information they are disseminating into the public or via through secretarial department or business department. See, if manager of that sales department is involved in the launching a product, before launching a product, before dealing it to the public, we collate the information from that department and submit it to the stock exchanges. This is already covered under Regulation 30 of the SEBI LODR.
Okay. Now come to the second point. Now you are aware that designated persons are there. So whether the designated person are aware of their responsibility, because Sanjay, you have big department, big organization. So many designated person will be there, those who have a knowledge. So the question is, you are doing training, but you have come across that whether these people are realizing their responsibility that if I'm doing this, it will be a problem.
Yes, of course. Seeing the size of the organization, we have around say 300 designated employees. And if we consider their, the family members, dependent family members, so the list is around say 700 odd cases. So to educate them consistently, or not only to the designated persons, as I said, we are continuously educating our entire workforce so that, say tomorrow they may be a designated person here. So they may be aware of the culture of the organization. That is why we are creating a lot of sessions for them, maybe, internal or external sessions. And at the time of induction also, we provide a, very comprehensive training and getting the declaration signed from them. So this is a continuous exercise for all of them, by which, we are just educating them about the responsibilities of the registered persons under the PIT regulations, because these are very, very sensitive these days.
Okay. Sonali?
So in our organization, what we have done is we have tried to do the cloning of the compliances officer's role. So at the functional head level, most of the functional heads, like we have 4 to 5 functional heads, each and every functional head is abreast of all the latest development amendments which are happening under the insider trading regulations. So their job is that as soon as any person joins in their particular function, either it's operations, either it is IT, or it is HR, or it is finance. So they have to actually train their employees who are joining in that particular department. That is function level training. And apart from that, we are also having the corporate and the organizational level training on a frequency of say a quarter basis, approximately just prior to the other meetings which we have for the functional level executives. So in those meetings, we try to get all the designated persons and all the employees of the corporate office so that they are also aware as to what all developments are happening. Apart from that, we have also started following a system wherein any notice going to any of the designated persons for the closure or the opening of the trading window, it has their roles and responsibilities in a summarized form, that what all they are expected to do and not to do during that particular given quarter, during the period of the closure of trading window. So we take a little advanced level in sending the notices also, in the sense that apart from minimum basic requirements, there is much more which we try to educate the designated persons on regular basis.
Anand, what you people are doing?
As earlier I mentioned that the company is conducting a awareness session with a frequency of 5 to 6 months. Apart from that, see, the thing is, every time when we add any person in the list of DPs, then at that time we educate them through any legal consultant or HR department about the do's and don'ts of PIT. Like we talked about like restrictions on contracted transactions, not to trade during blackout period, and that education also includes the process flow for taking pre-clearance from the compliance officer and declaring executed trades on our insider portal.
Okay. So Sanjay, Sonali and Anand, I'm just asking this question to all three. What is the frequency of sensitizing these DPs? So what, Sanjay, you people are doing? Are you doing regularly, or some changes are there, then you are doing, or some new person is coming? How you are managing?
So there are two parts of it. One, on a regular monthly basis, we are sending the emails to all the employees across the organization, by which we educate them about the policies of the company and the portal through which we are tracking all those, the insider trading transactions. And also at the time of joining of each and every employee, whether be it's a designated employee or not, we are providing the enough training at the time of joining itself.
Okay. And Sonali, what you are doing?
So what we are doing, as I was suggesting earlier, that all the functional heads, we try to educate them on a regular basis, on monthly basis. And as far as other designated persons are concerned, we try to do it in quarterly basis or in every 3 monthly basis. And any communication with regard to the insider trading going to any designated person is very elaborated. So we try to cover majority of the roles and responsibilities in the contra trade period, when they have to trade, when they don't have to trade, what trading plans they have given, how they have to follow the trading plan. So everything is detailed out.
Okay. And Anand, what is your frequency?
So as earlier I told you that actually we provide a awareness session and education to about PIT regulation to all our DPs. In case of any addition, we provide that education or awareness session on, I think, on a frequency of 1 to 2 weeks. Actually, we update our data on a basis of weekly basis, basically, and through our HR or any legal consultant.
Okay. Now, as you are aware that these are the training and other thing, how you are sensitizing. Now, you people are, as a designated person, you are the compliance officer, so you are clearing trades. So Sanjay, what criteria of pre-clearance as per the code of conduct of your company? How you are giving a clearance? Now, basically, to ask this question, because so many people are following the practices and sometimes they are facing problems. So through the expert, like you people, those who are managing, we are just communicating the criteria pre-clearance as per the code of conduct of the company, how you are following.
So the code of conduct is basically a document for us, which has no meaning, in fact, because we are covering the entire workforce of Havels, irrespective of the number of transactions or the value of the transactions. Even a single shared transaction for us by a non-designated employee is required for the pre-clearance purpose. So we are taking care of the entire population at Bango, irrespective of what the code of conduct says. That's an extra step, we are taking it just to ensure that nothing, go wrong against any of our employees.
And how you are doing giving pre-clearance?
So every transaction is pre-cleared. It's a portal, through which they apply for every transaction. And being the compliance officer, I take care of all these, approvals, seeing that whether the windows are closed there or whether he has done the the earlier transaction of buying or selling to avoid any contra trade. So I check, being the compliance officer on their behalf so that nothing goes wrong against them.
But suggest sometime you must be facing some difficulties to approve it, but that person is a personal problem. So are you taking your decision or you are talking to the management?
No, we go by, what the law says. So we are not relaxing anything on that. So we are very, very, I would say the compliant, there is no tolerance on these subjects.
Okay. So Nali, how you are giving pre-clearance? Any unique point?
Yeah, so as far as pre-clearance is concerned, we try to understand what kind of information is vested with the person who had approached for the pre-clearance. So that information is something which is provided in the SEBI regulations in our code of conduct, which is tantamount to unpublished price-sensitive information. And if he or she is in the possession of UPSI, then obviously there is a 100% no to the pre-clearance. However, we take a step beyond that. We try to see that under Regulation 30 of SEBI LODR regulations, if there is any event which is there and that person directly or indirectly is involved in that particular event, then we avoid pre-clearance.
Okay. And Anand, how you are giving? Because you are more.
See, sir, actually, our company is maintaining an insider tool through which any DPs who wants to apply for pre-clearance, he can apply so. And we have fixed our criteria for pre-clearance trade as per our code of conduct up to ₹5 lakh. It is available in in public domain. And apart from that, actually, we have also checks and controls for if any. I'm talking about if any DP is applying for the pre-clearance and that transaction is in violation of contract rate or any trading restriction, then the system itself open a pop-up window specifying the nature of violation, asking for reason to apply for such trade. So this is the kind of system we are maintaining.
Okay. Moini, are you face this question which I've asked? Any companies doing some differently, or this is what they are saying is okay?
Yeah, generally the practices is what they are saying, and in few of the companies, what I have seen is that even, for example, any designated person working in particular function, if applies for the pre-clearance to the compliance officer as a caution also taking the first clearance from their functional head, that means the HOD, that whether that person has any indulgence in any UPSI or so, and then they are pre-clearing those requests of the trade for those designated persons.
Okay.
So these are also caution, they are doing that as a thing.
Now, the word contra trade, as you are aware, the contra trade itself is a very confusing. And we have done a separate program on contra trade. And that day we received more than 45 questions. So more question means more non-clarity. Something is there. So now the question is, what is your criteria of giving relaxation from the contra trade? Sanjay ji.
So contra trade means, yes, Moini rightly said in her presentation, any transaction which is of opposite nature, be it purchase to sale or sale to purchase, even the any sort of derivatives are covered in that. So we also consider the same thing in the contra trade. The only exception to that is like if I change my DP from one account to another account, if I transact on that account, so there would be a debit in my one account and credit in the same another account, but that would be in the same PAN number. So if the contra trade in the same PAN number because of these reasons, then it is allowed. Otherwise, all contra trades are no to us.
Okay, Sonali, how you are doing contra trade?
So we have ESOPs also actually open. So our system is even more complicated. We have employee stock options and we have the shares, both we have to deal together. So again, the same thing that employees are sensitized on regular basis as to what are the do's and don'ts pertaining to contra trade. Like for example, if we send a notice to the designated persons for the closure of the trading window, we also mentioned there that they can keep on exercising ESOPs while the trading window is closed, so that they are very clear that ESOP is different as compared to the equity shares of the company. And as soon as the allotment of the ESOP happens, so that time we again intimate to the exchanges, and we also intimate to the allotment to the employee simultaneously. And as far as the trading in the shares is concerned, as Mohini has also mentioned in her presentation, when any person exercises ESOPs and the shares get allotted, that is not considered for the purpose of contra trade. So contra trade is actually buying and selling, and also the gifting would get confirmed, covered under the contra trade. So these are the certain principles which we try to educate the designated persons on regular basis, so that they don't violate in any circumstances. And also we try to bring their attention to the relevant provisions of our code of conduct on regular basis, so that every time they just try to keep on reading the code of conduct, even if they have to read 3 provisions, anybody will read 2 other extra. So that is something that that code of conduct is afresh in their minds on regular basis.
Okay. So Anand, how you doing, Param, the relaxation on contract
Yes,
trade?
sir. As Sanjay sir and Ms. Sonali has rightly mentioned, actually it varies from case to case basis. As we all know that ESOPs are exempted from the transactions till ESOP sale. And apart from that, if a person is transferring his shares under the same PAN number from one demat to other demat, that is also exempted, because he is only transferring the shares, not trading in the securities. Suppose that if we received any case of clear violation of contract trade, then in this case we will submit our recommendation to the audit committee, and post evaluation of audit committee will decide the course of action.
Okay, Mohini, are you facing like companies are talking to you? So in the contract trade, they are facing any problem?
Generally, all the company, no compliance officer is giving the relaxation in the contra trade for the contra trade to the employees. Many a times in the contra trade, generally the companies face a challenge when any DP goes for any intra trade activities, because in the intra trade day, they definitely enter into contra trade. But generally the compliance officers are not aware of, because it will not come and getting reflected in any of the benpos as well. But now I think it will be covered easily, because every DP's PAN number is with depository. So there, if they trade, even the intra-trade date they involve. So any transaction, if they are covering up, so 10 lakh, if it's more value, it get reflected in at the stock exchange. So I think contra trade relaxations per se, no compliance officer is given from this.
Okay. Anand, your number in betting coming every time last. So I will send you.
Okay, no issues.
Okay. How do you track the trading of your designated person? Because the one is that you have communicated, you have given, but how you are, because the purpose is not only to get the information. Purpose is the other people should also know that all these big companies where more employees are working, how these people are managing.
Yes, it's a very, I think, important question for all persons. Actually, as I earlier told you that we are maintaining a tool, our insider portal, to track the trading done by designated persons. Actually, we receive a weekly report from our insider portal, including deviation. Deviation includes any such types of violation like trading against contra trade restrictions, and any restrictions, any trade restrictions mentioned under the PIT regulations. And we have checks and controls. If any name of any DPs appears in that list, we simply submit our recommendation to audit committee. Like there is a process flow. We have already pre-approved penalty matrix like that: evaluation of deviation report, collecting the information from that DP, preparing the recommendation, and submit it to the audit committee chairman. Post that, audit committee will decide the course of action. What should be the course of action to be taken against that DP.
Okay, Sonali.
So again, for the tracking of the trading of the designated persons, we also have an in-house tool. And based upon that in-house tool, we track it on the weekly basis. And the deviations, if any, which is there, we've sent a warning letter to the designated person as to how he or she has traded. And that is something which is prescribed under the regulations and our code also. Depending upon the response received, we take the necessary action as is provided in the code of conduct. Once the action is taken, if penalty becomes applicable, then penalty is also recovered. And then the same is reported to the audit committee, as the audit committee has to ensure the compliances under the insider trading regulations. So these are the few things which we do, just to summarize it.
Okay. Okay. So Sanjay ji, yesterday Rohit Sharma has come on 7th number. So you are also coming on the reverse direction. So your question answer.
Yeah. So as I said, we are having, a tool developed for that purpose. This is very, very comprehensive. So on a weekly bank post, we have, we are uploading the entire bank post in the tool, and whatever the transactions are there, we are tracking through that tool. And not for the designated employees, even for the non-designated employees, we have a board approved policy by which we are, sensitizing those employees. In the first instance of any default by non-designated employee, we are just issuing a warning letter to him. On the second instance, we are imposing some financial penalties. And on the third instance, we are rather going to the extent of termination of that employment. So we are more rigorous on the PIT regulations part.
Mohini, you have inside list software. So that is how that software is taking care of this tracking of the designated persons trading.
Yeah, so if so nowadays every RT is giving the PAN-based Venpos, and if the PAN-based Venpos are there, yes, through Insylices we'll be able to compare the holding of last week to this week. So yes, the tracking of the trade by the designated persons can be done. Yes.
Okay. Now, Sanjay ji, how do you deal with the violation of PIT regulation and the code of conduct done by designated person? Now, we have seen you have control, you have asked things people are doing, you are giving permission, but somebody has done violation. So what is your practice, and have you come across anything? If it is not confidential, you can share. If it is confidential, you just give the academic answer.
Sure. So there were two types of cases. One, default by the designated employees, and second by the non-designated employees. So non-designated employees, I already explained the process of the board defined policy where we, ban them or penalize them or even terminate them. As far as the designated employees violations are concerned, we have not come across with any sort of, this violation, but definitely there is a SEBI prescribed law which says these needs to be reported to the SEBI and, to the audit committee in every forum. So we are following the entire code in its full speed.
Okay. And Sonali, what you are doing and how your experience?
So violation has been very less in our organization because the principle which we have set for at least the senior employees in the leadership team is that till the time you're not have to dispose of the shares you have got under ESOP, try avoiding purchasing shares of the organization from the market. So this we keep on putting it on the functional leadership at the top, that you should not trade in the securities of the company. Only if you have got certain shares in ESOPs, you dispose it off after going through the proper procedures as is provided in the FAQ under the code of conduct and consulting the respective people. Now, if there is a violation, then what we do is that earlier we used to send the warning letters, but now we ask for the explanation. And once, depending upon the kind of explanation given by the concerned designated person in the case of violation, we try to put the penalty as is provided in the code. We recover the penalty, we ensure that it is deposited under the IEPF, and then subsequently we report to the audit committee if any such instance has happened. So in like almost last 7-8 years, I have not observed more than 3 or 4 cases, not more than that. Yeah.
Okay. Okay. Anand, you have come across this problem?
Yes, many more. Actually, as earlier I told you that we have also pre-approved penalty matrix, and we are very much clear on the violations of PIT regulation. In the case, actually, we have a process flow like evaluating the deviation and collecting the information. Actually, apart from that, this is actually there is a lovely provision in under PIT regulation that board in under I think review of the compliance system is upon the audit committee, right? Then we accordingly, if we receive any violation captured under our insider tool, we submit it before the audit committee. We in past, if you talk about past, we have received many cases, like especially in a case of ESOP financing facility. If any company grants ESOPs and that employee has exercised that ESOPs by availing financing facility from any financial institution, and during the closure of trading window, the company share price falls, and he again and again is receiving margin calls from that financial institution. And in that cases, our audit committee is very much clear about that violation. We decide that it varies from case to case basis. We simply made our recommendation to the audit committee will decide. In many cases, we levied a monetary penalty on such persons, because under the same pen, it is it is responsibility of that DP whether to match up the margin calls or not.
Okay. Now, is there any specific checks and control implemented to avoid violation under PIT regulation? What you have a Sanjay ji, you have a software you are managing, but have you done something specific which can be useful for other participant also, so they can see this?
Yeah, so we have reviewed the entire agreements with our vendors or the other service providers, in which we have also included the confidentiality and non-disclosure clauses, just to make them more clear on the PIT compliances. And we are keep on checking with their code of conducts also, whether they have framed their code of conduct for their own employees while dealing with the Havels, as for prevention of any sharing of UPSI. So these are the additional things which we have incorporated in our all contracts and agreements.
Okay, and Sonali, what you are doing?
So we have gone a step ahead, as I discussed earlier also, that we ensure that confidentiality agreement is executed with all the insiders. Those insiders may be the designated person or the fiduciaries or the intermediaries who are coming in the context of insiders in accordance with the SEBI insider trading regulations. So we ensure confidentiality agreement is executed. We face a lot of resistance in this, like resistance comes from the financial institutions, from the banks. The resistance comes from the merchant bankers. Like recently, we have just completed merger of 2 listed entities, wherein there is a lot of resistance from the merchant bankers that we will not sign these kind of confidentiality. So we have to tell them that no, it has to be done. There is no option. That has been approved. The procedure has been approved by our audit committee. And we also take a further step, ensuring that that confidentiality agreement is signed by all the people who are dealing in that particular price-sensitive information. And it can go up to as many as 15 people, 20 people, 30 people who all have that access to the UPSI of the organization. So as far as designated person is concerned, I understand that every company has certain measures, steps, controls, and restrictions made available. But when we talk about the insiders and the other connected persons who are beyond the designated person, that is where I think the key role of compliance officer comes in. And you need to ensure that major stringent provisions are complied with, and not at the cost of the business, obviously. So the third thing what we have made it mandatory is that the CFO email ID, which generally sends the various kind of data to the banks, etc. on the regular basis, it has an entire disclaimer at the bottom of it that this information may contain certain price-sensitive information, which should only be used for the purpose of for what it has been provided and the legitimate purpose. You are bound by the insider trading code of conduct of the organization, etc. So those extra steps we take for the other connected people who are apart from designated persons.
Okay. Anand, what you are unique doing, because
Yes,
you are
and
a tech company.
I completely agree with what Ms. Sonali has mentioned. Yeah, confidential. When we deal with external regulators, and confidentiality agreement is one of the best option to execute between the company and the external consultants. Apart from that, we have under our insider tool, actually, we have a one declaration on confirmation also, which deals about the position of any UPSI when any DP is applying for a pre-clearance of any trade. If any DP is applying for the pre-clearance, that transaction, if that transaction is in violation of contract rate or anything trading restriction, then the system itself open a window specifying the nature of violation and all that. Apart from that, it is all about the checks and controls in our insider.
Okay. So now, Sonali, you have to leave. So I will ask you these. These are the questions which I have asked. Any other thing additionally you are doing? You are facing problem. You want to communicate? Please tell us.
So basically, the issue comes up when you have to make the awareness for the insider trading code of conduct of the organization. This is the first thing. What happens is the insider trading code varies from one company to another. And it is not that a company which is following certain restrictions or certain provisions, the other company from which any of your designated person has come in the organization, they also used to follow the same. So there's a lot of confusion in the system. Like one question I was going through in the chat right now, somebody has asked that the 6 months period or 5-year period would be applicable for the employees who leave the organization. So ultimately, it depends upon the code of conduct, and compliance officer has been given a lot of powers under the SEBI insider trading regulations. The kind of code of conduct which is there in place, the company is governed by that. Second thing is when any relaxation in any of the provisions is given by the compliance officer, my personal gut feeling is it should be ratified by the audit committee. Third thing, any approval for the trade of managing director and the promoters. Although the SEBI FAQs provide that managing director's trade to be approved by the audit committee, pre-clearance to be given by the audit committee if there is no trading plan in place. But I think that for the promoter level also, the approval should be given by the audit committee and not by the compliance officer, so that that bias of the employer-employee relationship doesn't come in between. So these are certain things which we try to adhere to in order to ensure that holistically we comply, pragmatically we don't fall in any of the clutches of the law.
Okay. Now, Sonali, tell me anything you are facing problem or anything you think the regulator should modify?
In the sense, the problem is basically what I understand is that there has to be certain limit beyond which this insider trading regulation should become applicable. It should not happen that any employee trading in 500, 200 shares and insider trading regulations becoming applicable on the employee. So this is one of the things which I find is too much complicated for the employees also to do and for the companies also to take care about it. Although the pre-clearance, they have come up with a limit of 10 lakhs, but then there should also be some basis limit for certain employees in order to provide them some kind of relaxation, as majority of the profiteering is done at only certain levels and by only certain people. So everybody coming into the clutches just because few people are profiteering out of it is something which has to be looked into by SEBI. And now the SEBI has come up with this July 19, 2023 circular also, wherein the freezing of the PAN will become mandatory for all the listed entities. So this freezing of PAN is, I think it's a welcome move, because this helps the compliance officer also to be a little relaxed that no trading will happen when the trading window is closed. So this is something which I understand is will be helping compliance officers going forward. And because this is in place, then I think they should bring up with some limits, some limit should be there for the up to which there should not be any compliances under the SEBI takeover code made applicable to any of the employees. And they can continue with the restrictions up to 2 levels below the managing director, but not to everybody. Yeah, because
Yeah, carry on.
Yeah, because sometimes I have found that innocent people coming under the clutches of the SEBI insider trading regulations and those fines in 3-4 cases which we have got implemented. It is not that it was a deliberate act to violate. It's just that the trading was very less, 100 shares, 200 shares. But yes, they have come into the clutches of the regulations. So
Okay.
that call should be taken by the compliance officer, whether the penalty should be made applicable, not made applicable. It can't be like penalty has to be made applicable.
Yeah.
Without
Sanjay ji,
you
you wanted to say something?
Yeah,
Yeah. So now, as you are aware, Sonali, the compliance officer has to work 24/7. After regulation 30, within 12 hours, you have to give all information about the majority points in the company. So let's gear up with more responsibility, and more responsibility mean more agile, and mind should be open, activity should be clarity defined. So technology usability is more and more essential nowadays, and we have to follow this. Okay, so now friends, before coming to the question answer, I'll request Nikita, because there are some case law, something which we are talking SEBI has decided some case law. So I'll request Nikita, because we have overshoot the time. So you please, within 10 minutes, tell us the summary of the informal guideline and case law, which is
Thank you.
decided by SEBI.
Thank you, everyone. So I'll take your leave right now.
Yeah. Thank you,
Thank you so
Sonali.
much,
Thank you
ma'am.
very much.
Part of
Thank you.
this team. Yeah.
Thank you. Thank you.
Thanks.
So quickly. So then I have to go for questions. Yeah.
So, in summary, I have actually put the all the relevant case laws, important informal guidance, and comprehensive comprehensive FAQs, which deal with certain queries which we are facing as a consultant on day-to-day basis from various companies. So there was this case which SEBI versus Abhijit Rajan, which is a very famous case in insider trading. The case has gone to Supreme Court. So Mr. Rajan was a chairman and MD of Gammon Infrastructure. There was a UPSI with related to the shareholders agreement contracts between the two companies, GIF and Simplex Infrastructure. So it was so Mr. Rajan had traded in the shares of Gammon Infrastructure just before this UPSI became public. So it was alleged by SEBI, and it was alleged by SEBI that Mr. Rajan has violated the insider trading regulations. So in this case, SEBI has considered that this trade, so Mr. Rajan in his defense has said that this trade was necessary and were necessary as a part of corporate debt restructuring requirement, and was done to keep the company alive. So keeping in view, Supreme Court has decided that this particular case, there was no motive for earning profits on behalf of Mr. Rajan, and Mr. Rajan cannot be charged with insider trading. So in such cases, it is very important to also understand and to assess the motive for whether there is any motive for insider trading or not. Going forward, there was an informal guidance of SEBI in the matter of Apollo Trico Tubes Limited. So in this particular matter, there was certain change of hands in control by a group of individuals to another group of individuals. So in that, there was one person who was still showing as the promoter of the company, but actually the control and the management was changed completely, but due to some restriction and due to some reasons, he could not sell off his shares and he could not reclassify himself as the public shareholder. So they sought an informal guidance from SEBI that whether in such a situation, such promoter who is just named as a promoter because he cannot reclassify at that point, whether he also has to follow the COC norms by under PIT regulation. So in this informal guidance, SEBI has said that if the said individual by the definition comes under the purview of the promoter, he has to follow the COC irrespective whether the management and control of the company has been changed or not. So next question is, what needs to be checked by the compliance officer of the company before granting pre-clearance to any designated person of the company? So in this particular case, SEBI versus in Shreyas P. Tambe in Biocon Limited, Mr. P. Tambe was the president of Biocon, and he was also alleged for the insider trading regulations. So in his submissions, he said that before making such trade, he obtained necessary pre-clearance from the compliance officer, and he also made a declaration that he did not possess the UPSI of the collaboration between Biocon and with Sandoz for next generation biosimilars. Although SEBI in this particular case has concluded that whether noticee was in possession of UPSI or not is dependent on the compliance officer's assessment. Just because he has undertaken in the declaration, that cannot be a Bible that he is not in the possession of UPSI and he cannot be charged with the insider trading. So in this case, SEBI concluded this, that it is very important for compliance officer to assess whether the undertakings and declarations given by the designated person while making the request for pre-clearance, whether the declarations in fact are true or not. Next is, can a designated person be held liable for offense of insider trading if the trades made by his portfolio manager under discretionary portfolio management scheme? So in various informal guidance and in some of the SEBI orders also, it has been clarified that dealings by DP under the discretionary portfolio management will still be the responsibility of that DP also, even though it has been made under discretionary portfolio management. Because Regulation 4.1, the explanatory part of the Regulation 4.1 states that any direct or indirect trading would be DP, the respective DP would be responsible for that. Next is, does the code of conduct and the regulation prohibit both designated person and their immediate relative indulging into contra trade? So we are aware that if any trading has been done under same PAN number, they cannot do contra trade. That is very clear. But in FAQs, it has also been mentioned that the DPs and immediate relatives both has to follow the internal code of conduct of the company. And it has been mentioned that the contra trade provision has to be applied collectively. For example, if DP has purchased shares, so he cannot, his immediate relative cannot sell the shares within 6 months also. So it is in case of immediate relatives and DP, it has to be seen collectively. Next is, are contra trade provisions applicable to the future and option trades also? So in FAQs, it has been clarified that any derivative contract that is physically settled on expiry shall not be considered to be a contract. So as we know that futures on contracts of futures and options, if there is a time limitation, if that expires automatically, that would not constitute contra trade. But before the closing of the contract, if you settle that contract, then that trade would be counted as the contra trade. Next is, who shall be held liable for failure of closure of trading window when the designated person are in possession of UPSI? So in this SAT order, in the matter of Mr. Rajendra Kumar Dabriwala, the code of it was held that the managing director taken a plea that the closure of trading window was not the responsibility of the managing director but of the compliance officer. For the longest period of time, they did not close the trading window, even though there was a UPSI in the company and the designated person were in possession of the UPSI. So SAT observed that the managing director being the part of the board of director who has to ensure that the code of conduct should be followed in letter and spirit. It cannot just shift the burden only on the compliance officer. No doubt compliance officer is also responsible, but it is also the responsibility of board to see that there is closure of trading window while there is a UPSI. Next is whether fund management employees, including fund managers and research analysts, can invest in schemes of AIFs. So since we all know that the COC is also applicable on the intermediaries, there are a lot of questions comes at whether AIF schemes also fall under these ambit or not. So SEBI has issued one circular dated 17 November 2016, which states that the employees of such asset management companies, trustees of mutual fund, their employees and director, they are also required to follow the PIT regulations. So, and consequently, the COC is also applicable for investment in AIF schemes and units of AIF, since AIFs also invest in listed companies also. There are schemes which invest in listed companies also. So our last question is whether SEBI can also take action against a designated person if the company already penalized him under COC. So SAT in the matter of Manmohan Shetty against a director of the AdLabs films said that code of conduct as mandated by the PIT regulation for all practical purpose is to be treated as a part of the regulations, and any violation of the code of conduct can be dealt with by SEBI as a violation of PIT regulation framed by it. So they can all, even though company has taken an action against the designated person under the COC, SEBI can still go ahead and if they feel that the action is not sufficient, they can also take in addition the action against that designated person.
Okay.
That's all from my side. Thank you.
Thank you, Nikita. You have given a view of the various cases. So now let's come to the question answer, because I have received 40 questions. So we have to do the questions and then a rapid round also. So friends, Sanjay, Anand and Mohini, I will ask questions. So Mohini, you give the answer, and Sanjay and Anand, if you have any additional point related to the, just raise your hand. So I will ask you immediately. Mohini, intermediary include merchant banker, broking, or SEBI registered entities? Answer is yes.
Yes, it's because merchant bankers especially dealing in the listed companies information like buybacks if they are coming or open offers. So yes, definitely all these entities are fiduciary and they have to comply with the PIT norms.
Okay. A retired employee, he goes from the company, up to what time he's responsible?
So either it's a retirement, resignation, in every case, it's a cessation of employment is there. A person remain as a connected person for a period of 6 months after his cessation. So he should be careful when he is selling the shares. So try to not to indulge in any trading for a period of 6 months after.
So this understanding of one of the participants that he's liable up to 5 years is not correct. Huh?
Not correct. Not correct.
So it is 6 months. If he's a connected person, so designated person will convert to the connected person, and that applicable up to 6 months.
6 months basically until the information become public. I think Nikita wants to add.
Sanjay or Anand, are you following the same 6 months practice, or it is more in your organization?
We are following the 6 months practice.
Yes, sir.
6 months.
We are following this practice. Actually, we are following it is actually mentioned under the PIT regulations. It is a standard practice adopted by the industries.
Okay. Whether a company can designate an
Nikita,
employee.
I think wants to add in this particular.
Nikita?
Yeah, the 5 years provision actually is basically with respect to the maintenance of their address and contact numbers, which is given in the FAQs of PIT.
Okay, so
These two are different things.
You mean to say designated person is there who is responsible for all. If he is leaving, he is a connected person. 6 months will applicable, and 5 years is applicability only to maintain his record.
Maintain. Yes.
Record on the part of the company, not on the part of the.
Okay. Okay. Whether a company can designate an employee as DP merely because based on his functional profile, say all the employee working in the legal department, though such employee have no occasion of UPSI.
Case to case base. That position of that person need to be checked by the compliance officer.
Sanjay ji, आपका कोई view इसमें?
So it will be on the case-to-case basis. If he has no, UPSI in his privy, then there would not be any classification as the designated person for him.
Okay.
So that needs to be checked on a case-to-case basis.
Okay. Will you please?
I completely agree.
Yeah.
I completely agree with this, Sanjay sir. Actually, it is actually based upon the case-to-case basis, because whether any person is falling under the category of DP totally depends upon the what extent of information or UPSI he has to access or he access in that company, in that profile, in that designation.
Okay. Mohini, will you clarify whether while recording entities in SDD software, we have to put official ID or personal email ID?
Official email ID.
Okay.
Once you leave the organization, you can put your personal ID so that if any communication like updation of the record for a period of 1 year, that can be done by the company.
Okay. If the designated person says the shares exceeding rupees 10 lakh value in more than one tranches in a month, in such case, when to intimate the exchange, whether on each transaction basis or consolidated basis?
So, sir, the law says that once you cross the 10 lakh limit in a one transaction or a series, so as the last transaction hits the 10 lakh, then you have to intimate. Again, this meter starts from the zero value. And again, when you hit the 10 lakh, you have to give, not on every transaction.
So it means you mean to say if I've done 7 lakh, I will not inform, but I will touch 10 lakh, then I will inform.
Then
that
yes.
is okay. But suppose I have done 12 lakh. So it is crossing 10 lakh. So it means that again, when I will touch to next 10 lakh, then I have to inform.
Yes. So, sir, if your one trade after 7 lakh makes you 12 lakh, give definitely. But after 10 lakh, for example, it's 11 lakh. Again, when it comes to 10 lakh, then you have to inform. Not in between that after 10 lakh, every 1 lakh of 50,000 rupees and transaction you have to inform.
So every 10 lakh I have to do.
Every 10 lakh you have to.
Okay. If we are compliant of system-driven disclosure, company also does not need to inform to stock exchange. Am I getting right?
So if you are compliant, if the company is complying and given the designated person's PAN numbers to the designated depository, then the manual filing is not there. But still there is a loophole in this because this disclosure need to be given along with the relatives. So relatives' PAN numbers are still not being given to the designated person. So in many of the companies, the companies have made that if you along with your relative, if crossing that 10 lakh, you have to manually inform. That means the same process to be followed. I think Sanjay ji or Anand can add more in this if they are
Sanjay,
fine.
yeah, you have any additional point in this? You want to add? Okay. In case of export of goods, the information of export turnover is in a month is available from some paid website. On the basis of such paid website, any trading of shares of the company is UPSI or non-UPSI, since the quarterly results are not available.
Information of export turnover is made some paid. So
Some website gives that this company has done this much export, so you can correlate and you can get the information. I think this is the public information. So what is
It
the
is a
problem?
public information.
So that is not a UPSI.
So, but generally the company makes it that the public information becomes public information when the company declares it. Because now if we say, I think in the LODR or so, these kinds of information, if it's not been given by the company, generally these kinds of information being asked and get clarified from the company. So I think any person is estimating from their side, it's not the public information until the company from itself they will give. Like in the automotive, generally on a monthly basis, they will make it public and what their sales figures are.
Sanjay ji, now you are doing export also. So there is a website on where you are putting all the data. So
if we are supposed to provide the public domain, the data into the public domain, then it would be non-UPSI. But if they are estimating it at their own, so that is not controlled by any entity. That is not even UPSI for that purpose.
Okay. How you deal the situation where the respective functions forget to intimate you about the joining a person in a DP category?
So
I think
company people can give better answer on this.
I think this is not, you can't do, HR has to inform this. So this is not, if you have done mistakes, then whatever, Moini, suppose I'm not informing, there are 10 DP in my company and I have informed only 9, one I left out. So what is the penalty?
Sir, it's the law that on an immediate basis, you have to inform with respect to the updation of the PAN number in the designated depository. If I'm leaving, definitely it's that the compliance officer is not doing his job. So definitely the penalty will come. But if the HR forgot to inform, then definitely due to internal control process, he is in the, there should be some kind of an action against that HR that they have not informed, because it's a chain which the compliance officer has to complete.
Okay. There's one question. How many training and awareness session do you take in a year? We take 365 days. Okay. So every company, someday, another day, Moini is giving presentation to the board and some people are asking questions. So this is a continuous process. Okay. How to ensure the using of private server for storing of the UPSI data are not violate the insider code?
So using a private server, that means because SDD, basically the law has said that the SDD is to be maintained in a private server. So there the SDD on a private cloud is also allowed. So the thing is that it should not be accessible to any person. It's a very closed private cloud where the restrictions of is there that the company can only check. So that is fine if it's maintained on the private cloud.
Can we maintain a structured digital database in macro and enabled secured Excel sheet in a non-temperable manner? Answer is no, not at all. Moini?
Not at all, sir, because I think since last 1 year, I think every listed company can't forget the last August when the SEBI has come out with the maintenance of SDD quarterly certificate. They have asked within 10 or 20 days, last August only. I think after that, if someone is asking this question, yes, please don't try to build up in Excel sheets this SDD, please.
Okay. Can we take digital disclosure on the day of joining itself? I need to understand the procedure for this.
It's, I think, 7 days after joining, the person has to give the initial disclosure. It's not on the joining day itself they have to give.
Okay. Which tool Havels is using, Sanjay ji?
It's a tool developed by our own internal team. I would be very thankful to them because they have spent a lot of time on developing that tool itself. And it's not even a recent tool. We developed it around, say, 7-8 years back, and it is running very good, very successful.
Okay. Moini, can you just explain ESOP trading restriction? Somebody is asking.
So right. So ESOP exercise is allowed. No contra, pre-clearance, trading window restriction is applicable. When you are selling the ESOP shares, every restriction is applicable. Trading window closure, no sale. Contra, you can't do. And even if it's exceeding whatever the limits in the pre-clearances, you have to obtain. So these are the 3 things which you have to follow in the selling of the ESOP shares.
Okay, Nikta, how do you decide on monetary penalty when there is a violation? Like in some cases, profit can be calculated, but in some cases, like DP had just bought 5 shares during closure of trading window, how to justify the penalty amount?
So regarding the penalty imposition by the company on the designated persons who are violating the COC, in SEBI also and tribunals also in various cases said inside trading, whether small or big, it is in the violation. So the penalty is not about how much profit they have made. It is one of the criteria. And the company should, as Anand sir also said, and there are various companies which have adopted a criteria-based penalty matrix, where they categorize the violations, where they categorize that from this value to this value, the penalty should be this. So there's a uniformity while imposition of the penalty.
I think to add in this, the number of along with the number of the shares, I think the designation of the person is also important. Because if the person is at the CFO position and he says, I have only sold 200 shares, so what the kind of impression among the other designated person he is trying to, might be he is in some position of UPSI, they are going to trade. So I think position also matters, when not only the shares which it matters.
So in such penalty matrix, there are certain benchmarks and rules that you can use while doing.
I'm adding some points in this. Actually, it is not simple to decide monetary penalty when there is violations. First, we have to understand the motto behind or spirit behind this law. Actually, first we have to categorize the level of employees, whether category A, B, C, or senior level, mid level, or lower level. Post that, we have to categorize the nature of compliance. See, there are 2 types of compliances: procedural non-compliance and substantive non-compliance. Like contra trade violations comes under the substantive non-compliance. Like if any DP forgot to apply pre-clearance, that is procedural non-compliance. So see, on the basis of the level of employees and the nature of violation, we decide the monetary penalty or warning letter, or any such type of harsh penalty or monetary penalty can be doubled if there is a repetitive nature of the same violation.
Okay. What is the, Moini, tell me, suppose I have done, I think clarify this point. Profit and trading of a small number of shares, even it is a violation. Is it right?
That even if it's for a small amount, it's a violation.
It's a violation. Only thing is the penalty amount will differ. But one part is the company is putting penalty. Second part is that SEBI is putting penalty. So what is the SEBI criteria when they are doing this type of adjudication?
I think so they will check the mala fide intention as well, because it's not only that because insider trading in every case it's not an insider trading. In many cases there is only like a compliance violation, pre-clearance not taken, trading window closer, and evidently they are not aware of, they have trade. So SEBI will check whether it's the motto behind this kind of a trade is originated or because of some UPSI they have done, then they will be imposing more penalty. But in other cases, it's only the compliance penalty is there. So only the penalty, only lakhs amounts.
Okay.
It will be done.
What is the criteria to be adopted for an employee to be DP?
The criteria is on the function basis and on the basis of the designation. And in the law itself, it's written the promoter, the KMP, and the 2 level below the KMP must be the part of a designated person. I think Sanjay ji also want to add. Sanjay sir, you want to add in this?
The practical problem, in case of, because the dependents are always be part of the main DP, but the only challenge generally log face, about inclusion of spouse in the list. So with the, the growing education and independence these days, so sometimes we feel, or rather every corporate house feels, there is no control over the transactions of the spouse, when they trade in the securities market. So my only submission to the DPs in this case is, भैया कुछ और डिस्कस करो ना करो, बट घर में PIT रेगुलेशन जरूर डिस्कस कर लो.
Okay. Moini, can audit committee compliance officer levy penalty on the officer director who are violated PIT regulation? If yes, under which authority?
This law has given the authority. First, it's the immediate action need to be taken. But companies have made that the compliance officer will compile all the things and put before the audit committee that this kind of violation has been done, and the audit committee will be imposing penalty. And many of the companies, because it's an immediate action required, like in Anand has said that they have made a penalty matrix. So even the compliance officer, based upon those parameters, can impose the penalty, and then later on it can be put over the audit committee. Audit committee wants to increase that limit, yes, increase that penalty, definitely they can do. And again, it comes to the SEBI. If the SEBI wants to additionally put in some kind of a penalty, they can do it. So this is the process in this.
Okay, how can we take initial disclosure on the day of joining itself? I need to understand the procedure for this. So can you just explain, Moini, quickly?
So on an immediate basis, it's not on the day itself. On the day of the joining, generally the company is getting the NDA signed from the employees. The disclosures generally be given, I think, 1 week's time at least, so that the person can compile all the relevant information about himself, his immediate relatives, declaration, holding of those of himself, and about his spouse or any other immediate relative. So in generally 1 week time will be given to all the general.
Okay, this is comment. Humbly request to keep detailed PPT on everything operate that is available. Please share today's webinar on YouTube. Yes, that is also available. Kindly suggest some good software to maintain SDD. So we can't suggest, because we will suggest our software, Moini has developed the Insilis that is complying all the things. So that is there. Now, friends, some other question I have received. So on I'll just go for fast rapid round. Moini, how do compliance officer verify the eligibility of designated person before trading, that he is not possession of UPSI, or he can rely on the declaration only?
No, I think so. Yes, definitely when he is applying for the pre-clearance, is signing. But as in the Nikita's one case, also it's being there that only the declaration is not sufficient. The compliance officer, I think they are Sanjay sir and Sonali has said that they are also himself, they are checking that the contra entry is not there, any kind of his involvement in the UPSI is not there. In one of my practical experience, the company is also taking an HOD's permission in that case.
Moini, very short. Very short now. Whether the compliance of code of conduct with request to trading in the applicable of the statutory auditor of the company?
Auditors are being governed by their own code of conduct. Being an intermediary, their audit firm is making those code of conduct. So
okay,
company's code of conduct is not applicable.
Okay, trade upon DP cease to be being DP. The company is required to upload the detail of DPs with the designated depository. In case of resignation of employee being DP, his detail should be removed from the list of DPs in the depository on the date of resignation or after 6 months.
No, immediately. Once he resigned, immediately, not after 6 months.
Whether pledge of share is a trade?
Yes, pledge is a trade.
Okay.
All the instances, creation, invocation, and revocation, all are trade.
Okay. If the DP gets married, whether the spouse will get declaration of holding as on date of appointment or as on the date of marriage?
Appointment के बाद marriage हुई है तो definitely He's
After
voting
the marriage, after marriage, 7 days you have to, when you report back to the.
on an immediate basis, you have to inform your spouses.
Only I'm suppose that I got married and then I'm going for honeymoon for 1 month. So when should I declare this report? Within 7 days?
Engagement के बाद declare कर दीजिए sir.
No, engagement का there is a cup and lips में बहुत time होता है मालूम पड़ा.
Sir, but if on an immediate basis means that as soon as possible you join back to the organization.
Okay. I gifted my shares to my son-in-law. Whether I can buy the shares from the market?
No, because gift is again a trade. So if you have gifted, you can't again enter
Okay.
into any contraposition.
Okay, brief upon open market and non-open market trade.
Open market is all kind of purchase, sale, gift, pledge, all are open market, and non-open is which the company is coming out with an action like FPO, bonus, split, or any open offers or so. That is the non-open market transactions.
Okay. Brief upon this whether freezing of pen at security level is a ban or boon. Nikita.
Sorry, sir.
Freezing of PAN is a ban or a boon?
I think it is a boom actually, because this will actually lower the burden of the compliance officer a lot and the manual
I think
filings.
Sanjay ji will give answer. Sanjay Anand will give answer. Because pen, when you are putting pen, so there's no need to check everything. One,
Yeah.
I think this SEBI's move is very good. And this has reduced the clerical burden on the part of the compliance officer and unnecessary problems they solve.
Yeah,
I'm
we appreciate that move.
Yeah.
It's a relief, sir.
Yeah.
It's a relief.
I'm a HR head of the company. I have no access of the financial information of the quarter. And in many cases, I'm not aware of the various UPSI event running in the company. Whether every time I supposed to be part of the trading window closer?
Compulsory trading window closer, yes, you are a part. But in other UPSI event, you are not a part. So no trading window closer period on.
Okay. Okay. Can I invest in a mutual fund or any specific restriction on its purchase?
Mutual fund, you are free to until and unless you are working in the mutual fund, because there is a separate code of conduct for the mutual fund.
Okay, the Arun Sonar is not satisfied if the DP gets married. Whether the spouse will get declaration of the holding as on the date of appointment or as on the date of marriage.
Sunny, if the person gets married, so in the law itself, it's been written that your spouse is an immediate relative. So you have to give the PAN declaration of your spouse. And if he's or she is holding any shares of your company only, you have to declare it.
Okay. In case of unintentional non-compliance, what step can designated person take to rectify the situation and mitigate legal consequences? Nikita.
He can suo moto inform the compliance officer in bona fide and explain the reasons and submissions if there is any necessity that he has done for in any medical emergency. So these all are the factors generally audit committee considers while penalizing under COC as well.
Okay, last question. Regulation apply to securities which are proposed to be listed as well. Considering this, would contra trade be applicable to share acquired in IPO?
For the proposed to be listed securities, a part of the PIT is applicable with respect to the information, but the trading regulations comes when the company get listed. So first trade after the IPO is your first trade, and after that
first you get allotment and then you sell. That is that will come
from
into the
there. It comes to start the trading restrictions.
So thank you very much, friends. We have covered all the 40 questions and we have discussed about their practices also, what they are doing. We have covered the entire aspects of DP. So before concluding this, as a ritual, I'm asking Sanjay ji, what is your overall view and what is the suggestion you want to regulator? Because all these questions, we will compile it and send it to SEBI. So what is your view on the entire thing and what message you want to give to regulator and the industry?
So we welcome this move of freezing the shares or the DP's PAN number or demat account holders by virtue of maybe in the phased manner, but that would be a welcome move from our side now. And this was more required from the compliance perspective. So being the corporate, we welcome this move.
Okay, Anand.
Yes, sir. I'm very much clear about the on SEBI PIT regulations. Actually, some people from the industry says it's harsh, but I think it's good. And if you talk about the enforcement of insider trading laws, it also increases the market liquidity. And when we talk about Indian economy, it is liberalized. The security market has to open to foreign institutional investors, and common investors aim to get quick returns in the short period of time. Like I'm quoting this line, the main aim of PIT regulations is that all the participants in the market have the same information.
Okay. Moni?
So in my opinion, thing is that in the PIT, I think every employee should be made fully aware of about his account responsibilities, their do's and don'ts. Only by getting them signing and only by getting them the declarations is not sufficient. So they must be made, I think in every organizations which you have heard today, they are giving on a continuous basis these kinds of training, and definitely it's the only requirement which is required for the on the governance part also in the PIT.
Okay, Nikita?
So I think everyone has covered most of the point. The one thing is, I feel although there has been issuance of various FAQs and informal guidances also by SEBI, but I think there are still certain areas which are not very clarified, and companies face various issues while dealing with these kind of trades, because every day we face new kind of situations. That designated person has done this kind of trade, what to do. One of the cases that the husband and wife are living separately, but they are not legally separated. So what to do, whether to consider them under COC or not. So there's very unique situations which are coming. So I think there are more clarifications, and gray area should be removed from PIT.
So thank you very much. Thank you all. मोइनी, एक लास्ट क्वेश्चन आया, उसका भी जवाब दे दो. इन केस ऑफ इंटरनल ट्रेडिंग विंडो क्लोजर फॉर द कॉर्पोरेट एक्शन अदर देन फाइनेंशियल, whether intimation to stock exchange shall be given?
No, and no. So for every trading window closure in the company, no intimation is to be given. Even for the trading window closure of the financial results, it's in the law itself that from the end of every quarter the trading window get closed. So intimation need not to be given.
Okay. So thank you very much. Thank you, Sanjay ji. Thank you, Anand. Thank you, Sonali in absence, Moini and Nikita, for covering this very topical subject. And friends, whatever questions you have asked, whatever issues are there, we will compile it and give it to SEBI. And in the next program, we are organizing jointly with SEBI, where we want to cover up certain issues relating to the contra trade and other things, and some problems relating to this. So the basic purpose of our webinar is that identify the problem of the industry, communicate to the regulator, and sort out the solution. So when they are coming out with their FAQ, everything should be clear. So thank you all. Thank you,
Thank you so much, sir,
for participating, and thanks everyone. Next Friday, 4 o'clock, we will again meet on the the topic of updation, which is very important. And then after this, on the next Friday of this, after this, we will have program on RPT under section 29 of IBC on 11th and 18th August. We will have a reclassification of promoters. So thank you very much to all.
Thank you, sir.
thank you so much, sir.